Hello everyone. Today we'll be exploring what composite assets are and how to create them in ERPNext. In ERPNext, you can create a composite asset when an asset is made up of multiple individual components or pieces that are purchased and booked separately but utilized as a single operating unit. This is ideally for complex assets such as computer workstations, lab environments, or custom machinery, where items like a monitor, CPU, keyboard, and UPS are purchased separately but need to be booked as a single capital asset. To create a composite asset, you would first go to Home, Stock, and Items. It is essential to create the items that would then be converted into assets later on. So the first item that we'll be creating our composite asset item, that would be the projector setup. The item group would be the office equipment since it is used for office purposes. We'll deselect the maintain stock part and we'll select the fixed asset. The asset category has to be the fixed asset itself, and then we'll save the item. Then we'll be creating the components of this particular item. So our major, the composite asset item in this case was the projector setup, and then it is comprised of two items itself, the screen, and we'll be creating another one later on. The screen is the first one. The item group will be selecting and will be selecting, it is a fixed asset. The item group has to be the office equipment, same as that of the composite asset. And now for that we need to create a different asset category since since screen is itself part of the composite asset, the greater item. So the asset category it would be lying in would be the composite asset itself, in this case the projector setup. So we'll be creating a separate asset category for it, named after our major asset, that is the composite asset. We'll be saving this asset category and it would automatically be mapped onto this item, that is a screen. We'll save the item so that it may be enabled. Then we'll be creating another item, another component of the projector setup, that would be the desktop. That would be the desktop computer. We'll be creating it. The item group has to be the office equipment. We'll deselect the maintain stock and would rather select the fixed asset. The asset category has to be the projector setup, the main asset in this case. Then we'll be saving it. Now since we have created these items, we'll be buying them so that they may be available in stock, or like they may be available when we'll be creating assets later on, when we'll be having to add the purchase requirement of it. So in order to buy them, we'll be creating a purchase order. We'll be selecting our supplier and let's assume we require it by today. The item code will be buying a screen, and we'll be keeping a rate of, since it's 25,000, that's a good rate. We'll save it and we'll be submitting this purchase order so that it may be processed further. Now from the same purchase order, we'll be creating a purchase receipt. We'll see whether the information has been mapped from the purchase order, which it clearly is. We'll just be choosing the warehouse and then we'll be saving this purchase receipt and then we'll submit it. Now from the purchase receipt, see, successful, this has been added. Then from the purchase receipt, we'll be creating the purchase invoice. We'll be seeing if the information has been mapped, which it rightly has been. We'll save it and we'll be submitting this purchase invoice. So screen is available to be used by our company. Now we'll be creating the purchase order to buy the desktop computer. That is another component of our composite asset, that is the projector setup. So the supplier would be the same. Preppers will assume that we require it by today. So since like these are small items, so we do not need to elongate the dates. We'll be choosing the desktop computer and we'll keep the rate of desktop computer as 50,000. It's like well, it's inexpensive, but yeah, we'll save it and then we'll be submitting the purchase order for the desktop computer from this. Now this time we'll be creating a purchase invoice rather than purchase receipt first. It does not matter much though. We'll be seeing if the information has been mapped, which it rightly has been. We'll save it and then we'll be submitting the purchase invoice. Right, it has been submitted successfully. From this purchase invoice, the status is still unpaid. From this purchase invoice, we'll be creating a purchase receipt and the information has been mapped. We'll just add on the warehouse, that is the right finished goods. It could have been stored too, that does not matter for now. And the purchase cycle, see, it has been successful. The purchase cycle has been completed partially in this regard, that this item is available to be used by us. Now I'll be creating the asset from the items that we have just purchased and also like the composite asset thing. So the desktop computer being one of the components, location on site, add on the location. We won't be selecting either the existing one or the composite asset part in this regard because it's none of them. The purchase receipt would automatically be see, the information has been mapped directly the moment we chose the purchase receipt. Now since it is a fixed asset, we'll be calculating depreciation on it. We'll be choosing the most commonly used one, straight line method, total number of depreciation, the frequency of depreciation, and the depreciation posting date to be today. We'll be saving it and we'll be submitting it. Upon saving, see, a depreciation schedule has been created for the desktop computer, as you can see, and that's a bi-monthly depreciation schedule. So after every 2 months, the depreciation for a period of 1 year, the depreciation would be charged to desktop computer. Going back to the asset, we'll be submitting this asset. Right, it has been submitted, available to be used. Now we'll be creating the other asset from the item we have just purchased. That is the screen in this regard. See the asset category, it has been mapped automatically from the item that we created. The location on site, it is neither the existing nor the composite asset. The purchase receipt, upon choosing it, the information would directly be mapped. We just need to choose the available for use state of this asset. Then we'll be calculating the depreciation on it since it is a fixed asset and it is like a component of the greater asset, the composite asset. Straight line will be keeping things simple, so we'll be following up the same thing as we did for the desktop computer. We'll save it, and sometimes it does take time. Yeah, upon saving it, a depreciation schedule has been created. We'll be viewing it, and we see again after every 2 months the depreciation has been charged for a period of air, and by the end of that period the accumulated depreciation is equivalent to the amount that we bought the item at. Will be, see, we cannot submit the depreciation schedule unless we do not submit the asset itself. So upon submitting the asset, the depreciation schedule would automatically be submitted. So now Now comes the part where we'll be creating the composite asset. So the now will be like our composite asset was a projector setup comprised of the components, desktop computer and the screen. Location would be on site. Now we'll be choosing as composite asset. uh, and see, since we do not need to buy this asset, we are just buying the components of this asset. So there, see, when we selected the composite asset is composite asset part, so then the all of the other information about the purchase receipt and the things, it vanished, just because we do not need to buy a composite asset. We rather buy the components of composite asset that make up the that particular asset. So see, even the depreciation checkbox is not enabled in this regard, since there is no depreciation to be charged on the entire composite asset. Rather, it is charged on its individual components. Then we'll be capitalizing this composite asset. Now, the reason we capitalize the composite asset, because we consider it to provide benefits for more than 1 year usually, and it then also this also ensures accurate profit measurement, and it also follows up the accounting standards. And if we capitalize it, so it's like it helps us to better track the assets value and use over time, right? Okay, so this composite asset, when we'll be capitalizing it, will be required to add the components it is made up of. So since it is made up of two components, the desktop computer, here it is, two assets, the desktop computer, the things have been mapped already, and another one to be the screen. In this case, here we see the value would be mapped. Yeah, it is. So see, the consumed asset total value is 75,000. That is of projector setup. We did not buy it separately. Rather, its value is comprised of the individual purchase value of the components it is made up of. We'll be submitting this composite asset, and we can even select a depreciation schedule for it. Note that the depreciation schedule would be of the individual components that this particular composite asset has been comprised of. We'll be looking into it just in a moment. It has been comprised of these two. We'll be quickly reviewing uh, whether things have been mapped correctly. And no, not this one. This is the heading. Just a moment. Yeah, this one. This projector work in progress. Let's see the depreciation schedule for it. We'll keep things simple, straight line, the total number of depreciations to be 6 and the frequency to be 2 and the depreciation posting date to be 3. Once we'll be saving it, we'll be able to view the depreciation schedule. Now here comes, if we just look at the accumulated depreciation by the end of the period, depreciation period is 75,000. That is the same as we just looked into, which is like the summation of the individual value of the components that this particular projector setup has been made up of. We see that again it's a straight line thing, and it has